Hey guys, welcome back to the channel. Next week we have two of the biggest events related to the US economy, FOMC meeting and non-farm payroll data. Today I'm gonna share with you an in-depth analysis related with both these two events and what to expect from Fed interest rate decision and non-farm payroll data as well. We are going to look at the fundamental perspective. On Wednesday, January 31st, we have FOMC, one of the biggest events for this month. All the eyes are on this date here. We had Fed monetary policy statement, interest rate decision, and the press conference, which is the most important part of the day. From the Fed, it is expected to keep the interest rates unchanged also this time from 5.5% to 5.5%. The market speculated a lot about this topic during this month, and the US dollar didn't move at all. It moved only small pips in many currency pairs. The problem is that the focus was on the most important economic indicators. During this week, the US reported CPI data that rose to 3.4% in December versus 3.1% in November. The retail sales rose to 0.6 in December versus 0.3 in November. And we had also the University of Michigan consumer sentiment data that gave the greenback an extra boost as well. Also during this week, we had the GDP product that increased to 3.3% versus 2% that was expected, and it was 4.9 during the previous time. The market speculated a lot about this data during the previous week. All of them are very strong, and they are suggesting that probably the Fed will not announce any decrease on the interest rates during the coming months. However, the market is still speculating about this topic, that the Fed may announce any cut on the March meeting or probably in June, and this is the problem, that the US dollar is not recovering so easily. We are going to look at also on the charts or the possible impact that they may create. And later we have on Friday the non-farm payroll data. For this month, it is expected that from 216K, it is expected to be 173K. The chances are higher that the non-farm payroll data can come in this number, considering that these are the data for January. Usually December has a very high request for workers. January probably we can see a slowdown here. On the other hand, the US economy is increasing, and despite this fact, we can see that the number of the workers may decrease with time because the request is very high. So this can be a reason that we can see a slowdown here. However, let's see what is going to happen related with the non-farm payroll data. However, I think that we can have a slowdown below 216K this time. If we are going to look at from a technical perspective, Euro USD that I have shared with you during this time, we have still this head and shoulder pattern, and the price is not taking a clear direction. Since the last time that I explained the head and shoulder pattern and the possible trading scenarios, the price moved down nearly 100 pips from this area here, and it looks like that this consolidation is increasing the chances that we can see a bearish movement that can respect the pattern here. But what can happen, because all the focus is only on the FOMC interest rate decision. So I think that probably the Fed is not going to announce anything related to a possible rate cut. So far we are still the market is still moving in this area between 1.0935, 1.08, let's say 26, approximately 100 pips movement, and the price stuck here for a long time, since the mid of January. So I'm not expecting the price to move before the meeting. Despite that the market is anticipating any possible announcement related to a cut on the interest rates from the Fed, the price is still hesitating, considering that we had very good data that were reported from the US, and the chances are that for the bearish movement we have to see a breakdown below 1.0825 in order for the price to continue down further. So we are still in this scenario for a bearish movement, and for a possible bullish movement the price has to jump above 1.0935 in order to increase. However, these are the 2 points that I'm looking at for both scenarios at this moment. Very complex situation overall, but I don't think that the price will take any clear direction before the meeting. On the other hand, we saw that during the previous week we had the ECB interest rate decision. During these days they said, but not during the meeting, they said that we are going to begin to cut the interest rates on June, but during the meeting they said that we are going to be data dependent. So we are going to look at the data before deciding when to cut the interest rates. We had also the Bank of Canada interest rate decision, and also the Bank of Canada said the same thing before ECB, that we are data dependent, we are going to focus on the data and later we have to decide. So we don't have to rush before taking any further decision. I think that it can happen the same thing with the Fed, and if they are going to repeat the same thing, and considering that the Powell is hawkish related to the US dollar and to his comments, I think that the chances are higher that we can see the price moving down from his comments. I don't think that they will share anything new or related to the data. On the other hand, it was speculated also with the GDP data that the stronger GDP data means higher inflation, but on the other hand, it is not supposed to be only higher inflation. It is supposed to have only a stronger economy. So all of this can push the price down. So far, the pattern is still showing a possible bearish move. We have all the bearish signs. However, we have to be careful, and this is a potential point where the bullish scenario can begin. So far, we are still in these 2 points. So this is for Euro USD. I had also requests related to other USD pairs, considering that the market is going to face all of this data. If we are going to look at GBPUSD during these moments, also this is holding very strong and is in a very critical situation. The price is holding in this zone since the mid of December, this point here. That is why GBPUSD is not looking good at all, and also it is getting very difficult for trading. On this time frame, or if we are going to increase the resistance zone, because the price is moving in this area since a long time, this is all the zone, probably we can say that also at the end of November we can take in consideration all of this point that the price is not taking any clear direction. From top to bottom, also GBPUSD is not moving very well. We have a 200 pips moving range here. Very interesting, because GBPUSD is a volatile currency pair. It is not a currency pair that moves in this way, but it has stuck here for a long period of time, and this is the area that we can take in consideration, these 2 points here. It is still waiting for this event, because it will show also the next price direction for this currency pair. So FOMC will be very important during this meeting. Despite the fact that we have 2 important data, the non-farm payrolls and also FOMC, the focus will be only on FOMC. Later, the market may take in consideration the non-farm payrolls, because the non-farm payrolls is not going to change the FOMC decision, considering that FOMC is the first one. So this is what we are looking at. We are still in this zone here where the price is moving without any clear direction. If we are going to increase the current time frame, we can see that all the moves are not clear at all. The price is not taking any clear direction. The price increased here. It was showing that it was going to move down from this point, but we can see another increase. And in this part here, we are in another pattern, a larger pattern. We have this type of ascending channel here, and this time it's bigger. And look at what this is showing. So the speculation about a possible rate cut from the Fed can push the price one more up, and we have to be careful because the price can come close to the top to test this area. However, we have the two possible scenarios. It may move down again, or probably it can break down from this point and it can move even lower this time. So if this is going to break down, it is likely that it can come close to the next structure zone, and I think that we have to pay close attention to this area, considering that the movement is not small. This is a big move. This is approximately 200 pips, and this is a possible bearish scenario that can happen with GBPUSD. It can move down to test 1.25 this time during FOMC meeting. If this breakout is not going to happen, we have to be careful because the price can continue to increase within the pattern. However, I'm only taking in consideration that the Fed will not share anything new related with a possible rate cut. They are very conservative considering these decisions, so they will be very careful during this moment. I think that they will still be data dependent like all the other economies, and this may begin a bearish movement that may continue slowly. The bullish move that I draw here, it has more chances to be created before FOMC meeting. However, one step at a time, we have to be very careful. The GBP is also very strong during the last weeks. So let's see what is going to happen also here. It will be very, very interesting. So far, we are still moving in this range trading area. The next one that I have shared with you is the dollar index. And as I explained also during the previous times, also from this point here, the price was after the breakout of the triangle. We saw the price to increase, and now it is accumulating again. The problem of this accumulation is related to the fact that we have FOMC. We had a very dense weeks before. We had retail sales, CPI data, University of Michigan Consumer Sentiment Index, we had GDP, we had also Price Consumer Index that was on Friday, and all of these were creating all of these movements here. They were just for an idea before FOMC. However, the price is creating this type of expanding pattern. Considering these moves, the chances are that we can be in this type of moves here for another fifth wave, or probably we can see this as a WXY movement. However, in all situations, we have to be careful because the price probably can take different shapes. So this is what we can expect. However, this is more complex at this moment because it is not clear, despite the fact that it looks like it can move higher. We have to be very careful from this pattern here. This is very complex situation, how the price is creating. It can also create a bearish scenario. However, we don't have any clear idea if this is going to move down because we don't have confirmations yet. This is still taking the shape of a bullish megaphone pattern, and when this pattern is created in this way, usually this is a continuation pattern. However, one step at a time. Let's see. But also the dollar index is showing for a possible increase, and this is going to push the US dollar even stronger. Let's see the next one. Another one that I have shared with you is also US 500. During January, during the mid of January, the price broke out from the previous high that is located near to 4,800, and it is showing for more upside. The price created a new all-time high, considering that the market is waiting for the Fed to cut the interest rates, the dollar index to become even weaker, and this is suggesting that if the US dollar is weaker, indexes may increase further. This is well positioned for the moment. However, we have to be very careful, because if the Fed is going to keep the bullish tones, then we have to be careful, because the price can stop in this area, because it has already stopped from January 24th here. We have to be careful, because we can see any move down and later a bearish movement. However, I don't want to anticipate any bearish movement at this point, considering that the price is still bullish. Probably we may see also any pause or any retest of the broken structure before the price resumes the bullish move again. So this is a possible scenario, considering that we are still in a bullish trend here with US 500. So this is still strong, and the possible retest of the previous broken resistance can be possible before it moves even higher. Another one that I wanted to update, considering that it is related with FOMC meeting, USDJPY. As I have explained previously on the previous analysis, the price was moving in this way. So we had the 5-wave movement near the top, it moved down, and when the price was here, I explained that the chances were high for the price to continue with a second wave or B wave correction. As you can see, the price is near to this zone. Despite the fact that the Bank of Japan didn't increase the interest rates and they didn't change the monetary policy statement, we saw USD hesitating to moving down more, and it is likely that the price is waiting for FOMC. Considering the current conditions, we have to be very careful, because now we are between two fires. If the price is going to break through this pattern, definitely it is going to test 151.80 or near to this zone. If the price is going to test this area again, as it did previously, then we may see the beginning of a bearish movement, because the Bank of Japan is waiting and they sent several messages during the previous times. So that is why we have to be very careful. This is still developing very well, like the previous analysis. But on the other hand, if the price will not break through this pattern, the chances are that it can continue moving down. However, I think that it has room to increase up more before it moves down. Overall, the second wave or the B wave correction, this wave here, it can be considered completed also at this point. However, I think that it has strength again to break through this zone and moves higher, considering also that we are going to have the FOMC support, and on the other hand, the Bank of Japan that is not changing the monetary policy statement. However, let's see what is going to happen. After FOMC meeting, we have the non-farm payrolls data. This may create some bearish pressure on the US dollar pairs. However, everything will be related with FOMC this time. So they are going to show the main price direction for the US dollar for the coming week. So this is overall. I hope you guys enjoyed the analysis. Please don't forget to hit the like button and follow. Thank you. Bye bye.